Good morning. Good morning. Let's get going here. So basically the markets have gone nowhere all week. And, yesterday's close was a little unusual. Like, did somebody hit the button that wasn't supposed to? Things were kind of floating lower, and all of a sudden there was this spike up. Anyway, we've got yesterday's low as a reference point and Tuesday's high as a reference point. But overall, I guess we have to look at this as being bullish to neutral, depending on the market that we look at. Because of, the move up, which is, I guess, a little unusual after a decline like that to just blast off the bottom and right back up again to negate that move. But now, we've just got this sideways action. And if you can look at this or imagine it on a closing basis, we just have a straight up line. It's gone sideways with a little wiggle, and it's just sitting here. And we'll see where today ends. But this market being one that's driven an awful lot by news, I guess we're waiting for news here to get these markets to move in one direction or the other. Looking at the S&Ps here, the assumption would be, based on the last couple of weeks price action, that the move would be to the upside, since prices are consolidating here, chopping sideways after the move up. And with this dip down, the view is that there is institutions just lurking below, willing to buy on the dip. And that suggests a move to the upside. Now, with that being said, we still have this topping tail up here, which obviously tells us that, institutions stepped up and sold. Now, some things like this sometimes just happen because things move too far too fast. And, now we're getting this consolidation where things are evening out, so to speak. So we still don't know, which way this is going to go for sure. We make some assumptions based on the chart, but this is being resistance and a very shallow retracement. This could easily turn into an M top, and especially if some news comes out, and this can go down. So looking at a chart like this, we sit on our hands and we do nothing if we're going to trade it from this time frame. That doesn't mean there aren't stocks out there that are showing relative strength and relative weakness, but just talking about this particular picture, there's nothing to do but wait. Now, if you think that the markets are going to go up, you buyer on the dip. If you think it's going to go down, you're a seller on any advances. And what's right or wrong, I guess we'll know next week, assuming that this just stays within the range, today. So that's basically the long and short of it as to what is going on here for now. As we go through different markets, we look for some other clues, but let's just take a look at the NASDAQ here, which most of these markets have, equity markets have looked pretty much the same, the broader equity markets, I should say. Same picture here, essentially. The Qs or NASDAQ futures have shown some relative weakness. They're not above this high. And they're just going sideways here, but we got the same topping tail, we've got the same bottoming tail, we've got the same go nowhere all week, running in place, waiting for the next tweet or whatever it is that's going to be coming. Same story here with the Dow. The big weekly reversal, which is obviously the big run up here. And one of the things that we talked about during the week, and we've talked about in MT Live shows, is that a big bar like that is a lot of small bars in a lower time frame, and the momentum in which it moves leaves little to no support below or the price void. So what we look for is and from the bullish point of view, is that prices then create support. And based on this week's action, that is the assumption based on this dip down and the recovery and sideways move. But just like every chart we look at that we make some assumptions about based on historical price patterns, where's the confirmation? Now, If you are a little more aggressive with less confirmation needed, well, you're getting it today, where this little blip above the high of that bar. And so if you choose to buy on a continuation pattern after a run, you put a stop below here and you wait to see what's going to happen, whether prices can move up. If it breaks down, well, you step aside. Money management will take care of any crushing losses, and you'll never experience crushing losses if you have proper money management. So here you can see the building or the creation of a support point where there was none. So far, prices just continue to consolidate up here, and we've got our trading range just waiting for something to happen to get things out of the range one way or the other. So it's kind of refer this as to a frog in the blender pattern or a commission generator, one in which, you know, prices look like they're going to go down and then they don't, and they look like they're going to go up and they don't. And, you know, so if you're trading that, you know, it's just flip-flopping back and forth. It happens. Bonds, they were higher a little while ago, and now they've dipped down. And if they break out of this range, and just based on the price, this type of price action, which is an inversion of what happened in equities, if this continues up, equities should go down, and then we'd probably be looking at that M top pattern where prices drop. If bonds were to drop down below here, well, that would support equities going higher. So right now, this is somewhat of supportive action. It's, you know, just in a trading range as well. So we are waiting. We're looking for the clues as to when this market will move one way or the other. And we don't have any, let's just say, an event yet to confirm. We spoke about crude oil potentially making a W bottom here. That happened yesterday. It backed off at the end of the day, and it's just holding here. So we've got that, and we have some S that we looked at yesterday. And so this is taking so long. I like this pattern. Like, it's in a downtrend, and if this can get above the high of that red bar, that's a buyable event with a stop below the low. So you're risking, give or take, about 50 cents, you know, for the potential to move up into this area, and then who knows where. But if it can get through it is what I mean. But in any event, you know, we've got oil here that looks like it can move up. We're just waiting to see, you know, if that oil does, maybe bonds go down, equities go up, and just choose whatever it is that you want to trade from a bullish point of view. And gold actually moving today, breaking out, going up to the next resistance area there. So that was a really shallow retracement, pulling back and now pushing up above the high. And so if buyers really want this, they better step up here rather than the momentum slow. But this is a pretty important area. We looked at this yesterday. You know, we talked about the big trading range. So I think it's going to be a pretty tough spot based on its inability to get through here, you know, since 2013. So that's a lot of years of going sideways. But if it can get through here, it opens up the door to a significant move because of the price void here. Momentum move down, consolidation over time, creates a void, and now that resistance area, right? This is the theoretical of MTS, is that over the course of time, prior reference points become less significant as prices move away from them. So we've got a big pattern here, and it's suggesting that prices can pop up, or should pop up through here, and then can make it, which should be a pretty significant move. So price action continues to be bullish. It looks good. And we'll just see what it can do here next week when it see if it can get through it. Maybe a little sideways price action right there, and then the break would be ideal. We'll see what happens now. Got some, you know, fly in the ointment, so to speak, in that semiconductors. Look at that monthly chart with that nasty big red bar. It hasn't followed through yet. And Let's just go back to the weekly. Pretty big move down, breaking through this low here. And that kind of led the way down day before yesterday. And, yesterday, like everything else, it just went nowhere. But keep an eye on these semiconductors to see if they start to fail further here. How Intel just fell apart, and MU. So we're going to see if maybe NVIDIA, there's a price pattern there that suggests it should be able to move up on the weekly chart, that reversal. But so far, it just hasn't been able to do anything, but neither has the market. So pretty much everywhere is a wait and see. If you want, you put on different positions and wait to see what's going to happen here. But no matter where we look, this week pretty much has been a non-event. Technology going nowhere, internet going nowhere, software going nowhere, and so on. And what was strong, that kind of whipped around. So it has not been, well, easy is kind of relative. If you fought this going nowhere, you're pretty bruised and beat up this week by the whipsaws back and forth. But if you just waited for things to really show some sign of an event, which it hasn't, you're okay, and you're just waiting. So, one of the biggest lessons about technical trading and investing, especially for active traders, is to avoid the chop as quickly as possible, because it just has an effect of mentally wearing you down. And when the move comes, you probably won't be able to participate, because you'll just be mentally exhausted and maybe financially depleted. So that's a huge lesson. We talked about that a bit in the room yesterday. How do you? So that's it. Yeah, that's it, Gus. Avoid the chop, and this is a perfect pattern of avoiding the chop. And someone in the room, I forget who it was, said, how do you do that? You recognize the failures in both directions, and we did see that yesterday. Right? I forget what it was that. What we did, we were just, I think, looking at the markets, and on a 5-minute chart, as I explained, that things just kind of whipping back and forth, trying to get through resistance and through support, and just going nowhere. And I don't have my moving averages on here. I don't know, for whatever reason I took them off, but as a visual aid, you're looking at your moving averages. In a situation like this, they probably, or at least two of them, will be kind of intersecting through the middle of prices, kind of like this here as it moved up. But you can see here where it really just starts to intersect and whipsaw back and forth through the prices, and that's just a way of visually saying there's really nothing going on here, because the moving averages going through the middle of prices, things aren't going anywhere. So there's kind of a helpful hint as to looking at your chart and seeing that there is no trend. So sit on your hands. Let me flip this back to a daily. And that is it. I mean, there are, gold, we're looking for possibly to move financials. Same story there. The market, you could just say, are consolidating last week's big gain, and that's normal. So nothing really unusual going on here. It's just been a non-event type of a week, and it is what it is. So I guess unless today something happens, it'll probably be another somewhat boring day, and we'll see what next week brings, and we'll look forward to a enjoyable weekend. That's it for me. All yours, Dan.
Hey, now it's option expiration day. We always find action.
Well, and that's a great point, in that just everybody, for those that are watching on YouTube that might be new in the room, one of the great things about the green room and what we do is that, look, if Dan and I did exactly the same thing, it'd be like, okay, more of the same every day. But we trade very almost the same in that the price patterns we look at. But Dan is an options trader, prefers spreads, where I am more of a just buy or short the instrument and trade it directionally. I like spreads too, but they're not my favorite vehicle. And I like them when they're basically saying, come pick up the money, you know, short time to expiration, the pattern that's a no brainer. Those I like. You know, the others, they just not within my comfort level. And that doesn't mean that they're not great for somebody else. There are different instruments to trade. There are different price patterns to trade. And as an individual trader and investor, you don't have to do them all. And the more you limit what it is that you do, odds are the better you'll be at what it is. Right? What's this saying?
Yeah, be a specialist. Exactly. Not a master of all. Right.
Right. You know,
Master of none.
yeah, expert of everything and a master of none. Something how the saying goes. Yeah. So.
Well, just to add a point, I got an email from a subscriber yesterday saying, "Hey Dan, on every credit spread trade you give in you know either service, can I just buy options instead of sell them?" And I said, "Absolutely not." I said, "We have directional trades where we do multiple time frames in alignment. We do bullish stock and option trades." And if it's a directional trade, sure, you can then do an income trade also. But as we know, we're just calling a short-term top or bottom, and it can just be total slop. But the probability of support or resistance holding is high, and that's when we sell our credit spreads. So that was a big old no. All right, let's continue here. LRCX. Hey, remember we talked, I'll look at Beyond in a second, because we talked about maybe doing a call spread yesterday, and I said, you know what, let's wait for today. But weekly options trader, we only have two. LRCX here, I sent a text out. Well, let me give it to you all in case I just give you the update here. I sent this to our subscribers pre-market. Rich, MT Live, directional setup or spread setup. Well, I don't even think that's needed for a whole topic because I can answer it in, you know, one sentence. It's what I just said already. Directional is beautiful, multiple time frames and alignment. And option spread is that also, but the target, the audience, the range of opportunity is so much bigger, because it could just be slop. All right, so that's LRCX. Lily, I put in both letters, a bear call credit spread plus directional. So see, if we have a directional, it's a candidate for a credit spread. You still have to go through your checklist, of course, which means proper strike, liquidity, you know, adequate credit, so et cetera. Now let's look at opens real quick for the swing letter, swing and options trader. NYCB, we shorted stock yesterday. Triple W we shorted, and you can add under yesterday's low. Calm, we did a sell setup, closed above the open. We'll just keep the original stop. Apple, I just posted, is gapping under. Now look, I always do trade, excuse me, review to see if we missed anything. I mean, this was a bullish consolidation yesterday. Look at this igniting bar in the first 15 minutes, breakout. It was a beautiful setup. And then right when this little area failed, we legged into a covered call. You know, Greg said, oh, but you're capping your gains. And I said, well, I don't care. I'm okay with selling the 197.50s to lower my cost basis. And remember, into the close yesterday, I said I couldn't fault you if you wanted. What is this? 193.69. Yeah, so it didn't stop out, but I remember saying it's a judgment call if you wanted to, you know, hold your breath and see if we get a gap up, and it's gapping under. So that's the risk of holding overnight, both stock and option trades. BBBY, we shorted yesterday. Well, it's just in a nasty trend, but I gave the warning about, you know, some activists being there lurking. WLL, we did on the bearish gap down. We have a bear put debit spread, which is a directional option trade. And finally, TRV is actually our only bullish trade. Everything else is bearish. We have a covered call, still in an uptrend, rising 20.50. So our covered call reduces our basis, even when the stock going sideways. So that one is doing his job perfectly. You know, just a couple other semis are going to get hit here with the Avgo bad earnings. So there's NVIDIA gapping down. That's a bear call credit spread candidate for today. I'm not going to be rushing into trades for next week because, as Greg summarized, we need more data. But I will. My bias is shorting bear call credit spreads that expire today. NVIDIA is one. Let's keep an eye on it. Spiders. They're neutral here, but under if they can't bounce 30-minute low is an idea, or 30-minute high. I mean, this thing is neutral, so we will trade these either direction. McGraw sent me this pre-market. It's kind of a bull flag consolidation after making new highs. I'll keep an eye on that for next week. I told him to time it with the market. Here's Fiverr was on, hey, that rhymes. Fiverr is on fire. We pointed out this no-brainer 2-minute entry. You know what I'm gonna do? Look at this. I'm gonna do a video later when things slow down on how to trade an IPO. Now look, what do you call it? I don't have time for quizzes, but look, here's a breakdown failure, and then back up and sideways and above the 20 and red bar ignored. Over that red bar was another entry. Look, bottoming tail, buyers, broke out again. This is sloppy, but it's still in an uptrend. Got climactic, and I remember one gentleman in the green trading room sold right there. And I 100% agreed with him. We did some live analysis together. Nice job. 5 minutes here. VXX, which is a volatility ETF, if it can get, today's Friday, if it can get over Wednesday's high, set an alert, then, you know, it's a retest there on support. And if the markets do sell off, you know, that's how we trade volatility. You must also look at what the spiders are doing. 9/11, very bullish gap. This is a bullish pre-market consolidation. Look at that's. I don't know if that's bio or what, but the gap is too excessive for me. Chewy is coming public. Vince, what's Vince doing? 1385. It's bullish. I don't like the volume. That was earnings, I think. I'm just deleting you. No volume, I'm deleting you. Fencer had earnings, 2180, bearish gap, but no pattern. 257, bearish gap. We got to wait and see. 30 minutes. Yeah, I saw some guy on television, on the board or founder or whatever, and he's saying, yeah, we'll sit there and talk to you for 2 hours about your 8 cats if you want. And I'm like, what? It sounded like a pet psychologist. You got to, don't even get me started. If you have to call somebody, never mind, let's move on. Devin, I'm going to keep this one on my list and see if it can form a double bottom with, you know, if oil holds, crowd, another recent IPO, we'll keep an eye on it, OMC. Big bottoming pattern with a breakdown here, kind of reverse head and shoulders. I like the 2-bar on the weekly. Let's keep an eye on this. FND looks great as a 1, 2, 3. Put that on your list, your long list. And pre-market, I'm glancing at my other computers. The index ETFs are holding. And IWM actually had the best close yesterday in terms of negating the red bar. Tesla, actually a bearish 1, 2, 3. That's a candidate. That's a candidate for a bear call spread that expires today. Papa Mike is still a valid short. under 77. Mohawk, I put in both letters, put spread and directional, because I was trying to get a better price here on a pullback. And I'm kind of done here. Facebook relative strength. This is a put spread candidate for today. Well, Gustav, you're looking at old, last night prints. You aren't going to get that. You aren't going to get anywhere near that, particularly with the gap down. Yeah, no, but keep an eye on it. I'm always throwing out ideas. So Nvidia, Tesla are call spread candidates, and Facebook is a put spread candidate. Look, 180 gapping above here. It's not a swing, of course, but look at the 15-minute chart. That's a bullish uptrend, bullish igniting here, pre-market out of this base. If it can hold the gains, it looks great. Oh, Roku also. Roku is a bull 123. It's posted as a directional. Let me actually post the actual numbers now. 105.40. And the initial stop is under the wide range bar, so that's 99.49. Lily gapping down. We're in that.